If you had $1,000 in your hand right now, what would you do with it? Buy new clothes? Take a weekend trip? Order something you probably don't even need? Because here's the truth. $1,000 can disappear fast. But that same $1,000 can also start building your future today if you invest it the right way. So let's talk about how to invest $1,000 in US stocks, even if you're a complete beginner. First things first, you don't need to be a finance expert. You don't need fancy words. And you definitely don't need a huge amount of money. You just need a starting point. And this is it. Step 1. Open a brokerage account. Think of it like creating a digital home for your investments. Platforms like Robinhood, Fidelity, or Charles Schwab are simple, beginner-friendly, and free to start. If you can make a social media account, you can open this too. Step 2. Choose your investing style. If you want to keep it simple, choose ETFs. ETFs are basically bundles of many companies in one place. You're not betting on one stock. You're spreading your risk. The two best beginner-friendly ETFs are VOO, which tracks the S&P 500, and VTI, which covers almost the entire US stock market. These are long-term wealth builders. They grow slowly, steadily, and safely. If you're curious and want to explore individual stocks, start with big, stable companies. Apple, Microsoft, Google. Companies that have real products, real growth, real strength. Not random penny stocks someone recommended on Instagram. Remember, investing is about learning, not gambling. Step 3. How should you use your $1,000? One safe and smart way is this. Put $700 into an ETF like VOO or VTI. Put the remaining $300 into one or two strong companies you personally believe in. That's it. Simple, balanced, beginner-friendly. Or if you want to make it even simpler, just put the full $1,000 into VOO or VTI and let time do its magic. Step 4. Don't check your investments every day. That's how you panic. The market goes up, it goes down, and it goes back up again. That's normal. Your job isn't to react. Your job is to stay invested. Even adding $20 or $50 a month can completely change your results over time. Step 5. Avoid these 3 beginner mistakes. Number 1, don't chase trending stocks. If everyone is shouting about a stock, you're probably hearing about it too late. Number 2, don't invest in companies you know nothing about. And number 3, don't expect overnight results. Real wealth grows slowly, quietly, and consistently. And here's the final message. You don't need the perfect plan. You just need to start. Because the person who invests $1,000 today will always be ahead of the person waiting for next week. Your future starts with the first step. And this is that step.